Local, late breaking. This is WBAL TV 11 News Sunday morning.
Welcome back. The time right now is 9:19, and here's a big question for you. Do you have life insurance? Does your spouse? Financial advisor Kyle Winkfield is here to talk about why life insurance is so important and the types of life insurance that you should consider. Good morning.
Good morning.
Why is this question so hard to broach with someone that you love?
Because when most people think about life insurance, they think about death. And death is a morbid topic, right? It's pretty depressing. So that's probably why most people don't talk about it. Think about it. Think about this. You pay a premium,
right,
and the only thing that you're going to get out of it happens when you die.
But it's what your family will get out of it that's so important, and if you don't have it, you could be leaving them in a devastating situation.
Absolutely. Life insurance is all about legacy. I like to think of it like this. It's the greatest practical financial love letter you could leave your family.
Wow, that's a powerful statement. There are two main types of life insurance. Talk about those.
Okay, two types, term and permanent. Now, when I say term, I want you to think rent. So we think renting, like renting a car, renting a house, renting an apartment. So when you rent or buy term insurance, you're renting that insurance coverage for a specified amount of time. At the end of the term, it expires.
And you don't get any of that money that you put into it.
Exactly. Now there's permanent. Now when I say permanent, think own. So when we think own, how about a house? You can own a house, you can own a car, you can own an apartment. When we own a house, you build up equity over time. Same thing with permanent life insurance. You can build up a cash value account with the premiums that you pay, and at the end of like 30 years, you still have your insurance, no expiration date, and you have a nice savings account attached to it.
Yeah, and with the permanent, you can often take money out of it for certain reasons. Is that correct?
Absolutely. Not only certain reasons, for whatever reason you desire. It's a savings account attached to the life insurance coverage.
But one is more expensive than the other.
Can be. Can be over time. It depends how you look at expensive.
Right.
Okay, term insurance, you're paying that premium all those years, and after 30 years, you have nothing to show for it.
True.
So you have to think, wow, that's a lost opportunity cost. What could I have spent those dollars that I used to cover myself all these years? Whereas permanent insurance, you're building up equity over time, so that cash value builds up over time and gets interest. You earn interest on it. So over time, it can be the least expensive overall.
So in the 30 seconds or so that we have left, you sort of answered some of these questions, but the questions that you should be asking why you need this in the first place.
Okay, do you have a family?
Yes.
If you have a family, then you should own some life insurance. Okay, what kind of love letter do you want to write to people and organizations that you care about? Life insurance is a very powerful financial product. It allows what you want to happen even in the event you're not here. Okay, so ask the first question, how much do I need? How much is enough? And a competent, independent life insurance professional can really help you assess how much insurance you need at that moment right now.
And your quick thought and getting your kids covered as well. That's hard for a lot of families to think about.
Absolutely. Many insurance products that you can put in place, life insurance, actually have like riders for your children. So you can add a child rider and allow your child to be covered, or pick up some permanent life insurance. I did that for my son. He's 2 years old. Okay, he's insurable right now. We picked up permanent insurance for him, so that's going to build up cash savings for him. He can use that cash savings when he's 18, 19, 20 years old to do whatever, but he also has coverage in the event he gets sick and no longer can get coverage at 20 or 21 years old.
Oh, questions you ask yourself and you put in practice yourself. Kyle Winkfield, thank you so much for joining us this morning.
Thank you.
Good information.